Ladies and gentlemen, good day and welcome to M&B Engineering Limited's earnings conference call for the quarter ended June 2025. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference, please signal an operator by pressing star and then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Malav Patel, Joint Managing Director from the company. Thank you, and over to you.
Dear shareholders, it gives me immense pleasure in welcoming you all to our first post-listing results call. On behalf of M&B Engineering Limited, I wish to express our sincere gratitude to all the investors in reposing such tremendous confidence in our company and making our IPO a grand success. I am assuming that you would have got a chance to look at our numbers of Q1 FY of 2026. However, once I finish, our CFO Keyur will take you through our key numbers. I'm delighted to report that in Q1 FY 2026, we have posted a strong overall consolidated growth. Our revenue from operations grew by almost 69% in Q1 FY 2026 over the corresponding quarter of FY 2025, and our bottom line growth was even stronger. Further, I wish to emphasize that as per the trend of our business that we have generally seen, typically our fourth quarter is one of the strongest quarters, and sales in H2 are generally higher than the ones in sales in H1, with almost 60% of annual sales coming usually in the second half of the year. Looking at it from this angle, I must say that Q1 FY 2026 performance is not strictly comparable with Q4 of FY 2025 performance. I wish to add some flavor to our key growth drivers. As it is seen, we have a strong order book of around 843 crores as of July 1st of 2025, comprising of Phoenix, which is our PEB division, that has an order book of 634 crores, and Proflex division, which is our self-supported roofing, having pending orders of around 209 crores. It is heartening to note that our pending export orders of PEB were about 123 crores, most of which relates to exports to North America, primarily to the US, and a few orders which we started getting from Canada as well. As you may be aware, our Sanand, Gujarat facility is the only PEB facility in India which has a certification by the American Institute of Steel Construction, also known as AISC. While this certification is not obligatory, most of our customers whom we have worked for in the US have demanded for it. Further, I am also happy to inform that recently our Sanand facility has gotten a similar certificate from the Canadian authorities by the name Canadian Welding Bureau, which is compulsory to have if I plan to sell any of my building components to the Canadian market. We have been working quite extensively, quite hard in developing the US markets over the last few years, and I'm happy to state that as we speak, we have a strong presence in the East Coast of the US, and are closely working with a large number of general contractors, whom in the US market are called GCs, which are akin to EPC contractors in India. As against FY 2025 exports of around 65 crores, this year we are targeting to increase the exports by more than 3 times to the US. In the US, for any export market, we generally have a scope of just manufacturing and supplying, and the general contractors take up the installation part. Our US exports are subject to sectoral tariff, which is borne by the US customers. This sectoral tariff was first introduced by the US government under Mr. Trump way back in February of 25, which was initially 25%, and then towards the end of beginning June 2025, it was increased to 50%. Here I wish to clarify that the 25% reciprocal tariff recently announced effective 18th August is not applicable to us, since we fall under the sectoral tariff of 50%. We believe that in spite of the tariff and the higher freight cost that is involved in delivering the PEBs to the U.S., we are still price competitive as compared to the prices quoted by the U.S. manufacturers, and our margins in the U.S. are still higher than the margins earned in India. Apart from U.S., Canada is also a big market, and we have also started the process of setting up our sales team, our required marketing infrastructure in Canada after receiving the CWB certificate. As we speak, we are currently executing about 3 orders already for the Canadian customers. Thus, we are steadily increasing our presence in the North American market. As you may be aware, we have commenced our second PEB plant located in Cheyyar, which is about 2 hours away from Chennai in Tamil Nadu, in the year FY25, which was effectively operated only for about 4 to 5 months in the last year. In the current fiscal, Cheyyar will be operating for the full year, and therefore we will get the benefit of the incremental production from Cheyyar anywhere in between 15,000 and 18,000 metric ton in the current fiscal year. Cheyyar is focused on servicing the southern markets, which are also showing a lot of promise in terms of industrial capex, right, in the greenfield and the brownfield projects coming up, particularly in the states of Tamil Nadu, Karnataka, Andhra Pradesh, and Telangana. A little bit about our self-supported steel roofing division. We have a strong order book of about 200 crores. Further, you may be aware our Proflex roofing are now approved by the Indian Railway Board, not only for the Vande Bharat shed or the railway platform, but also for the railway underbridges, which are commonly called RUBs, which are used to cover the entry and the exit points of the railway underbridges, right? At present, there are about 20,000 level crossings in India. With Vande Bharat and other high-speed trains, the Indian Railway Board has taken a strict measure of safety policies, decided to convert most of these level crossings mainly through RUBs and in some locations with overbridges. For each of these RUBs, self-supported steel roofing is now specified in the tenders which are floated by the Indian Railways Board, correct? To cover the entry and the exit points, so that during monsoon, flooding can be avoided and the RUBs can be functional all throughout the year. While we do not directly work or bill to the Indian Railways, we are the preferred supplier to all the EPC contractors who are generally awarded the works, such works from the Indian Railways. Similarly, on the agri-warehousing segment, which we service, we have a massive opportunity in form of the government decision that the primary agriculture credit societies, which are also known as PACs, have to install our Proflex roofing for covering the agri-produce which are stored in the open currently. This is apart from the regular agriculture warehousing opportunity on which we are already focused upon. This opens up a massive opportunity for growth in this segment. Lastly, we also see a lot of growth, a lot of traction in the SME division, which generally the customers are from small to medium size, and they opt for Proflex roofing whenever there is a conventional construction methodology applied. In terms of our expansion plans, we have already commenced the implementation of our Sanand brownfield expansion project for augmenting the PEB capacity by 20,000 tons per year, mainly for servicing our North American export markets. Our target is to make it operational in the first quarter of FY 2027. We also plan to thereafter start implementing the Cheyyar PEB brownfield expansion project with an additional 20,000 capacity as well, which should become operational in Q1 of FY 2028. We have also decided to augment our Proflex capacities by procuring additional mobile units in the current fiscal, over and above our existing 14 mobile units. Thus, we are committed to fully capitalize on the available growth opportunities in India as well as outside of India. We are targeting an overall top-line growth of over 25% in FY 2026. Further, with a strong increase in the exports expected in the current fiscal, we are confident of further improving our EBITDA margins in the FY of 2026. I once again wish to convey my sincere thanks to all the investors for supporting us in our journey. Over to you, Kevin.
Thank you, Malav bhai. Highlights of the key performance indicators are as under. In Q1 FY26, revenue of Proflex, that is self-supported roofing system division, stood at 61.42 crores, as against 45.83 crores in Q1 of fiscal 25. We saw 34% growth. Revenue of Phoenix, that is PEB division, stood at 176.23 crores in Q1 26, as against 94.39 crores in Q1 FY25, showing a growth of 87%. Thus, the total revenue from operations stood at 237.65 crores in Q1 FY26, as against 140.22 crores in Q1 FY25, showing 69% growth. In terms of quantities, Proflex division sales stood at 3,21,050 square meter in Q1 FY26, as against 2,60,271 square meters in Q1 FY25. In Phoenix division, sales quantity in Q1 FY26 were 14,822 metric ton, as against 6,579 metric ton in Q1 FY25. As per the past trend, normally seen H2 sales are generally around 60% of the total sales and H1 sales are around 40% of the total sales. Hence, Q4 25 performance is not comparable with Q1 26 performance. Sales not recognized as revenue in Q1 FY26 were domestic sales of 12.77 crores and export sales of 15.79 crores. This represents dispatches made, but revenue recognition criteria not met due to Ind-AS formality. EBITDA stood at 33.68 crore in Q1 FY26, as against 16.29 crore in Q1 FY25, and PAT stood at 17.95 crores in Q1 FY26, as against 6.94 crore in Q1 FY25. Reported EBITDA margin was 14.17% in Q1 FY26, as against 11.62% in Q1 FY25. Other income was 4.21 crores in Q1 FY26, includes other operating income of 3.66 crore and other non-operating income of 54 lakhs. Interest income on bank FD is treated as operating income, since this mainly relates to FDs kept as a margin deposit with banks for BG and LC margin. Excluding other non-operating income, the EBITDA margin for Q1 FY26 stood at 13.94%, as against 10.21% only Q1 FY25. The net working capital stood at 55 days as of 30th June 25, as against 32 days as of 31st March 25. I now request the moderator to start the Q&A session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to please use handsets while asking a question. Ladies and gentlemen, we will now wait for a moment while the question queue assembles. Our first question comes from the line of Harshit Patil from Equirus Securities. Please go ahead.
Hi. Thank you very much for the opportunity, sir, and congratulations on a very healthy set of quarter. So my first question is on our order inflows. Could you highlight how many fresh orders we have registered for both our division, Proflex as well as Phoenix, for the first quarter of FY26, and what do you aim to achieve on the full year basis?
Yes. So first quarter, we have got new order intake in Proflex division to the tune of 80 crores and in Phoenix 196.80 crores, so totaling to 277.62 crores.
So Ashir, I think on an average about 100 crore per month currently is the new order intake. कभी-कभी क्या होता है कि when there is a big order, there could be a big push, but you may take it that at least 1,000-1,200 crores new orders we are targeting this year minimum.
So, perfect, sir. Sir, my second question is on the realizations. In Proflex, we have achieved almost 1,900 rupees per square meter in this quarter, and in Phoenix, about 119,000 per metric ton. Do you maintain the similar quantum of realizations for the remainder of the year, or we will see these realizations going up or maybe going down?
Realizations, Harshil, as we move more on the exports, actually realization will go up. But Firhal, from a domestic standpoint, what you are saying makes sense.
Understood,
ये
sir.
आप
Perfect.
कर सकते हैं around 119 to 120,000 on the domestic front. Export will be definitely higher.
Understood, sir. Perfect, sir. That was all from my side. Yes, sir.
Thank you.
Thank you.
Thank you. Our next question comes from the line of Man with Growth Sphere Ventures. Please go ahead.
Hi, sir. Congrats for a very decent set of numbers, specifically in quarter one.
Thank you.
Sir, two, three questions. First is on our margin side. So when we actually benchmark you to each and every competitor, whether we consider listed or unlisted, so nobody is able to clock the level of EBITDA margins or EBITDA per ton to the level that we are clocking. So whether we take Kirby, whether we take multiple listed companies as well. So could you help me out with the level of complexity that we are building in the project? Is that the reason? Or how do we see the margins of yours going ahead from here, and why are they specifically very different from the industry altogether?
So maybe Malav, you may first give your qualitative inputs and we'll add with a little bit of numbers.
Yes, basically the numbers, we have a combination of domestic business as well as international business, right? When we are talking about our PEV division, right? So in the US, we've been working for the last 5 years. Correct? US में क्या होता है कि generally the local companies over there, because of the higher cost, they are not able to give a comprehensive solution. Unlike us, we give a total solution right from engineering, detailing, manufacturing, and of course, then delivery. So with this combination, we are able to give the price that is much higher than what we are able to command in the domestic market. And even at the price at which we are selling currently in the US, we are much more competitive per ton. Like if you compare apple to apple, US में अभी $3500-$3600 चल रहा होगा, and we are delivering at $2500-$2700, and we are very competitive, right? So our US margins, EBITDA margins stand at any point between 25 and 27%. When we combine that with our Indian margins, which stand at around 10 to 11%, the weighted average comes to around 13 to 14%. Plus our Proflex business, which no other PEB company in India has, our Proflex roofing division, that itself by itself, the business is having an EBITDA margin of anywhere between 11 and 12%. Right? So all put together, our domestic business as well as the US business and Canadian business, our EBITDA margin stands to be apart from what the industry is currently posing in India. Yes, Sanjay, you want to add that?
So two things, Mr. Man. One, as Malav explained, it is a business mix. Second, more importantly, I think we are sort of known to handle more complex jobs. And we have an element of repeat business, 60 to 70% of large key clients generally are repeat. जब भी repeat है वहाँ L3, L4 भी है हमें तो we are preferred because we have in the past delivered through extraordinary relationship plus commitment all the jobs on time, and we have even done the most complex kind of jobs. Thirdly, as Malav explained, apart from Proflex and in PB, we do 100% jobs in India with our own erection teams. We hardly outsource anything. So due to that reason also our margins on the erection side are generally quite healthy. I would say more healthy than maybe most of the competition. And fourth, we are extremely cost conscious. We have followed a very strict policy of covering our raw materials for the jobs on hand on the PEB side. Now, you know what happens therefore, that the moment I get a job, I make sure that either I have that material in inventory or I have already ordered it, with the result that my margin based on which I have quoted is protected. So, and then maybe we are a little more cost conscious. It's the combination of all these factors. I would say lastly that on a pure domestic side, I think our margin would be 100-200 basis points minimum higher than the competition, is even slightly more. And then on the export side, it is going to be much higher. So I think as a combination, we are confident. Of course, we are very conscious that we are working in a competitive environment, but we are confident of delivering higher margins.
Got it. Hey, that was very helpful, sir. So, sir, my second question is on your working capital side, right? So, again, when I benchmark you guys against multiple listed peers, at that point in time, your working capital seems fairly elevated, your inventory seems fairly elevated. And the interesting point is that our creditor cycle is also fairly elevated to the point our creditors are basically willing to give us more extended period of time for paying off our purchases. Whereas we'll be purchasing from the same creditors, right? So could you put some light on that part as well?
Sure. Keyur will give you, I think you have seen our presentation, correct? So we have given a very detailed stuff of all the key working capital components, right?
Right.
Sir, we have 55 days working capital cycle during the current quarter, which was 32 days in the previous quarter. Now, important factors out of which is, say, first is inventory we have mentioned in our presentation and all. Say, important factor is creditors put together with buyer's credit, which constitutes and defines the total ultimate working capital cycle. Our current days for working capital, which is trade creditors and buyer's credit, is 98 days. So we have 98 days creditors, which includes for import creditors, which 90 days in open credit plus 180 days in buyer's credit. So this is the defining factor. And in all we have 55 days of the cycle vis-a-vis 32 days of the cycle. If you want any specific...
No, so I'll add two things. On the qualitative statement, he has given you the numbers, I'll add. One, Proflex, 90%, 95% of my raw material is imported from a very reputed Korean supplier who gives us open credit of $10 million every year. This is a very specialized raw material called PPGS, pre-painted galvalume steel. This is high tensile steel. It is coated with aluminum and zinc, and then it has double coats of paint. ये जो हम import कर रहे हैं, on an average we carry 4.5 months of inventory for Proflex raw material. Secondly, on the PEB side, while we do only domestic procurement, we do from JSW, ArcelorMittal, Nippon Steel or Tata, etc. वहाँ we don't get extended credit beyond 30-35 days. But what Keyur has explained, that after the normal credit period, we take buyer's credit at 6 or 7% rate of interest, where my banks extend that credit from 180 to 270 days. Our idea is that this is a very cheap credit we get, which is sort of an extended credit at a very low cost that we avail, which gives us a lot of flexibility in managing our working capital. Therefore, you see, your query was why my creditors are high. So I have replied to two things. Why my inventory is high? Because I cover all raw material, whether it is PEB or Proflex. And then why my inventory is high plus, which is supported by higher credit at a very low cost. Therefore, see, ultimately you look at net working capital cycle. So And then, of course, you get advance from customers also. So instead of netting the debtors, we have shown both the figures separately as per the balance sheet reporting requirements. Therefore, you see, yeah. Okay.
Got it, sir. Sir, another question that I have, you said that you are basically aiming for close to 1,200 crores of order inflow, where, as per the presentation that you said, the average execution time period is close to 8 months. So when we say that we are looking for close to 25% of growth, are we basically underguiding to some point? How shall we look at the same? Because when we do the math, if the number is highly above that guidance.
I tell you, our philosophy is to remain a little conservative in guiding, and we have said over 25%, so let us see. See, again, please understand, we are working under extremely volatile conditions. Nobody knows after a few days what Mr. Trump is going to do. So, we want to remain a little cautious. Let us see, let us reach our second quarter. Maybe we will review our guidance if required. Don't worry. But minimum 25 is what we are ready to commit.
Got it. And last question or last insight that I would like from you guys is that could you help me out with the average order value that we have on the PEB side in our order book right now? The per order कितना बड़ा order हो सकता है, divided by total number of orders. And second thing, could you help me out with some of the benchmarks that we have done? I saw that we have done Adani ka, Mundra ka, wo jo glass wala plant hai, everything. I saw the same. But some more projects that will help us basically benchmark in terms of qualitative sense making, where does NDL stand in terms of business against its competitors?
So I'll take this order. This is Aditya. The average orders, the orders keep on varying from quarter to quarter or month to month. The smallest, or normally our order size, we look at somewhere 22 crores, 22 to 25 crores. But there have been orders which are at 100 crore plus, 150 crore plus as well. And there are few orders which are at 5 crore as well. So the range is very vast. As and how it comes, and depending on the margin, we choose and select the orders as we get. Just to answer the question.
And on the Proflex, our average order value would be lower because we do small jobs of maybe even 50 lakhs. Biggest job could be 15 crores. PEB it could be, as Aditya said, minimum 5. I think in the past, our biggest order was 270 crores. 270 was our biggest order last year. But this year, most of the large orders are in the range of 50 to 75 crores. 50 to 100 crores. And the mid-size orders are 10 to 50 crores.
Yes.
Got it. And on the qualitative side for the...
Just to add to that, when you're running a big order, you need something to as a filler. So the small orders are also taken just as filler, so that there's no production loss per se.
No, that makes sense. That is very helpful.
Aditya, you can share the benchmark projects that we have done in the last year, 2 years,
So a couple of projects that we are working on is one of the projects for I'm not supposed to say the name because of NDA, but one of the large automobile companies. We are setting up a complete line for them. There are a couple of large projects, like I can say right now, Vishakha Glass is one of the large glass manufacturing plant for the solar that we have done. We are working with a couple of Adani projects as well, multiple areas right from Green, Adani Green, Kutch Copper Refinery, airports. So we have quite wide data area where we have been working. Currently, we are executing also the largest project that we have done. Currently we are executing not the largest, one of the large projects in US at this point, which is close to, I would say, somewhere around $10 million approximately. And so there have been instances where multiple orders have been there, which gives us more motivation to go for bigger and bigger. And with the existing pipeline, we are quite positive that it will be better.
Got it.
I'll add a little bit to this. See, I will not say the company names, but we've been working with the largest of Japanese EPCs in the last 10 years, right? And all these Japanese EPCs execute all the manufacturing units or industrial units which come from Japan, from the Japanese companies, right? So we've done extensive work with all these Japanese companies in the last 10 years.
Got it. Got it. That was very helpful. Would love to catch up with you guys in the next quarter. And
Sure.
thank you so much, guys. Thank you so
Sure.
much. All the very best.
Thanks. Thanks.
Moderator, I have a request. Maybe we restrict maybe not more than 2 or 3 questions per participant and then take balance questions later in the queue.
Certainly, sir. Ladies and gentlemen, in order that the management is able to address questions from all participants in the queue, we request you to please restrict yourselves to 2 questions. You may rejoin the queue for follow-up questions.
Thank you.
Our next question comes from the line of Raman KV from Sequent Investments. Please go ahead.
Hello, sir. Can you hear me?
Yeah.
Yeah.
Sir, I just want to understand initially in the opening remarks, you made a comment about Vande Bharat, you supplying to Vande Bharat railway, your projects with respect to them. Can you throw some light on them? What are you doing with respect to the Vande Bharat trains, and how is the order info with respect to it?
Chirag, you want to take it up?
Yeah. Hello. This is Chirag Patel. See, Vande Bharat, as everyone are aware, they are expanding the Vande Bharat trains across India. So for Vande Bharat, they are putting their pit line sheds, their maintenance sheds everywhere across India, and we have done extensive work in Mumbai, in Ahmedabad, around Delhi. So being a self-supporting roofing system, we do not need any trusses and purlins. And these Vande Bharat depots are an open structure, meaning because the trains have to go inside, the ends are open. So with the added advantage of our system where there is no area for birds to sit, it becomes very good system for such kind of shades. So Vande Bharat, they have already many tenders are out, and where a self-supporting roofing system is already a part of the contract, a part of the tender, and which will in the coming times be awarded to the EPC contractors. And in all probable chances, we being the largest self-supporting roofing system company in India, same will come as an inquiry and ultimately as an order in the coming quarters and years. The second largest opportunity, I'll complete on railways. So the big opportunity that also we are seeing is for the RUBs, which Malav earlier said. There are about 20,000 level crossings, and Indian Railways have decided to convert these level crossings with an RUB in rural areas. In city areas, there will be flyovers. Like flyover will be at least 50 to 100 times more expensive than an RUB. So that also our system has been approved. Again, same benefit that it is a quick installation, zero maintenance, no area for bird sitting. So that has also been appreciated by the Indian Railways, and many tenders are under process to be awarded to the EPC contractors. Yes, please.
So just a follow-up. So what is the total order value with respect to the Vande Bharat, the pit lane? And the second part?
Yeah. The railway part is about 35 crores of Proflex. It would be a mix of Vande Bharat plus some platforms, etc., but 35 crores of Proflex outstanding.
No. I just want to understand the TAM. What will be the TAM with respect to this pit lane? Pit lane.
Yeah.
So you are saying about the
entire this order which is about to come.
See, and on an average, a Vande Bharat depot will be anywhere between 15,000 to 20,000 square meters. And RUB will be in the range of say 1,700 to say 2,500 square meters. So now 2,500 square meter, if you only take 2,000 square meters, there is a great amount of opportunity in RUBs. About 20,000 LCs are there. We are not saying that it is going to be converted in a short period of time, but as we move forward, this has been a stand that has been taken by the Indian Railways that they want to convert these level crossings to RUBs in the coming time. And as you said, TEM, the exact number is not available, but we can work out and give it to you.
Yeah.
Thank you, sir.
A thumb rule, Chirag, I'll just give him a comparison. In last 25 years, we have done almost 1.8 crore square meter of work in Proplex. And what we are talking about runs into several thousand square meters as a TAM. So honestly, it's huge, but as Chirag said, we have to be measured and conservative. Let us wait and watch.
Okay, thank you, sir.
Yeah.
Thank you. Our next question is from the line of Deepak Podar from Sapphire Capital. Please go ahead.
Yeah, am I audible, sir?
Yeah, clear.
Sir, just wanted to first understand on export mix. What was your export mix in FY25 and how should one look at export mix over FY26 and FY27?
So you see, last year we just started effectively exporting to US. So we did about 65 crores last year. This year, as we speak, as Keyur explained, about 15 crores of dispatches have already been made, but which will be obviously booked as revenue in Q2. Another 125 crores of export orders are on hand, and some, at least an equal amount of export orders are expected to come over next couple of months, 2 to 3 months, and we did about 3 crores Q1 actual sale booking. So mota we have said about 3x at least of last year to export hona chahiye this year. Again, we are adding Canada. We exactly don't know how big Canada can be, but I think Canada is also very exciting, and then we have to add Africa in next 1 or 2 years. So मैं मानता हूँ कि next 2 years we want to target at least 20% of our top line to come from exports even after factoring full domestic growth. This is not at the cost of domestic growth. This is over and above domestic potential for which we are very excited.
Understood. So FY26 3x versus 65 crores and FY27 at least 20% export mix.
Hopefully.
Correct.
Yeah, and given the margin differential we have in exports versus domestic, exports you mentioned 25-27%, while in domestic India it's 11-12% margins. So ideally this will be give a big boost to your overall at a company level.
I have a rider here. So Malav made a general statement. All orders will not come, but your margin profile in export is at least 1.5 to 2x than what we are getting in India. Which orders may be a little more competitive. If Mr. Trump drops the bomb day after tomorrow and says that 25% further duty on everybody, we'll have to see. But hopefully, we are very sure that this will not come on us because we are on the sectoral side and not on the reciprocal side. But you never know. But yes, you are right, margins are very healthy in exports.
So given the mix will increase, so on a blended basis, what sort of improvement in margin we can expect? I mean, can we expect at least 2% kind of EBITDA margin improvement in next 2 years?
Sir, आपके मुंह में घी शक्कर, but we will have to see, honestly. We don't want to overcommit. Let us see. Margin will improve, but we'll be a little more strict, very, very qualitatively determinate. Let us wait and watch for one more quarter. Margins will definitely improve.
But
that's all I can say.
Having said that, we are committed to our long-term strategy and we are very hopeful and working towards such improvement. So that goes without saying.
But I don't want to commit, 2%, no.
I know, I got it. But directionally it will be in the northward direction.
Yeah. It will go north.
Yeah.
And just a clarification, I mean, in terms of capacity expansion, you mentioned currently we have got about 72,000 installed capacity, right? Of PV.
In Sanand, you're right.
And we are expanding 20,000 there.
32,000 in Sanand, 32,000 in Chair. First phase of 20,000 tons is already commenced implementation in Sanand. It should become operational next June, somewhere next June. And second phase, that Chair will be implemented next year to be made available June 27.
June 27. And you mentioned something on the expansion of the Proflex side. So I missed that. Can you just
So maybe Chirag, you want to add something on Proflex?
Yes, see, Proflex also, if you see our current order book, outstanding order book is close to 209 crore, and there is a lot of traction. So we are adding at least few more equipment in this year and looking to add furthermore in the third or fourth quarter. We'll place an order which will generally takes about 4 or 5 months to be delivered. Our supplier is an US-based company. So they are the inventors of this technology, and we have only been using the MIC industry equipment for all our requirement of Proflex. But we see a very, as Sanjay Bhai already said, that if the opportunities that have been created by doing our sales and marketing activities, there is a lot of traction going on, a lot of inquiries are there. So we are adding more and more capacity, at least few equipment in this year, which will be added, which will come into picture in Q4, end part of Q4 this year, FY26, and few more will add next year.
Understood. And what would be the revenue potential? I mean, an optimum utilization post all this expansion. I mean, we spoke about three expansion, right? At Sanand and Cheyyar and Proflex. So post all this
both our businesses, optimally we can push at about between 75 and 78% of our installed capacity, depending on the product mix that we receive. And obviously, our sales price is related to the steel pricing. So, given the current outlook and the visibility that we have, the steel market has been stable because of the macro environment which is going across India or across the world. But if there is a increase in the price of steel, then probably
you can very safely take about 4x of the capex.
Okay, so currently, I mean, last year we were about 1,000 crores of revenue. So post this expansion, we have a revenue potential till 4x of this. Is that what you are saying?
4x of the capex, yes, thumb rule.
4x of capex.
Okay, 4x of the capex. And what is the total capex amount in this three segment? Total three expansion.
We have done 130 crores estimated capex. There will be another 25 to 30 crores of capex, which is not planned as a part of IPO, but which we will do. So about 150 crore pakad lo aap.
150 crore pakad. That's very clear, sir, and actually very helpful also. I mean, I would like to wish you all the very best. Thank you so much.
Thank you.
Thank you. Once again, ladies and gentlemen, we request you to please restrict yourselves to 2 questions only. Our next question comes from the line of Jay, an individual investor. Please go ahead.
Hello, can you hear me?
You are audible, sir. You may proceed.
Yes.
Yeah, thank you for giving me the opportunity to ask a question. So I would like to know if we can expect a similar growth run rate for next 5 years or 4 years.
We have to really look at the crystal ball, but we are targeting at least a 20% growth year over year from 26 onwards, after 26. After 26, this year will be a little more aggressive, but from next year onwards, target 20% hai.
Yeah, thank you. And can we expect the margin to be similar, or can we expect an improvement?
I think margin improvement, we have answered a previous question. We are looking at it, but it's a bit too early for me to predict and forecast on a long-term basis. But yes, we are looking. We are happy only with higher margins as a philosophy.
Yeah, thank you.
Yeah.
Thank you. Our next question is from the line of Himanshu Bisani from Pinpoint X Capital. Please go ahead. Himanshu, your line has been unmuted. You may proceed with your question.
Hello, am I audible?
Yes, you're audible. Sir, you have a lot of disturbance, background disturbance.
Hello?
Sir, you have a lot of background disturbance.
You may take the next.
The next participant is Anup Singh, an individual investor. Please go ahead. Anup Singh, your line is unmuted. You may proceed with your question. As there's no response from the current participant in the queue, we will proceed to the next questioner. Our next participant is Surya Narayan Nayak from Sunidhi Securities and Finance Limited. Please go ahead.
Yeah. Thank you, sir, for giving me opportunity. Am I audible properly?
Yes, Mr. Nayak, sorry.
Yeah. So my question is that, I understood your ambition of higher margin and where you are coming from. Like, we have seen a drop in the revenue growth in FY24, and even it rose. But to understand that now we have taken around close to 90 crores additional money from the IPO, which will be lying nearly idle. And we have a pre-money ROCE of around 31%. And obviously that will be the opportunity cost loss would be close to 20 crores plus for FY27 and FY28. So just to understand the current, the additional money that you are actually have taken from the public, why you are shying away from raising the revenue or activity, because we are currently order book wise, we are nearly only 1 times the order visibility of the FY25, whereas we should be eyeing more. But the working capital turnover is around 4 times, 4 to 4.5 times. So obviously there is room for activities here, especially when the facilities are underutilized. As for the prospectus, the Sanand chair of course is a new facility, but the mature facility of Sanand has been operating at around 60% utilization. So there is room for the existing facilities. So there was no need for the additional facilities so soon. But why the level of activities? My concern is that why you are harping so much on the margin side rather than at least sacrifice, because you are at the higher than the industry average. So we could have sacrificed a lot to go for higher activity. What is your take on that?
So Mr. Surya, I think we will break your questions into 1 or 2 subparts to make it more clearer. First is on the utilization. If you see my presentation, we have already utilized about 104 crores after listing on 6th August. And we are on 25th August out of 259 crores of net money available out of my primary portion. I have repaid my loan 40 crores till June and another 20 crores we have recently repaid. And then our debt part is almost zero now as we speak. On the new capex from day one, we were clear that first phase of Sanand and second phase of Chair, 130 crores additional. We are absolutely committed to spend this in this year and next year without any difficulty. We are adding another 25-30 crore of capex from our own cash accruals. So that speaks that we are very committed and very clear that how we want to grow. Now on the utilization, my chair plant became operational only last year, somewhere in November, effectively. So when you look at the whole capacity and production, it is bound to show a very low utilization. This year, I believe it should go up to 50-60% without too much of a difficulty. In our industry, in a PEB business, average utilization, when you rate a capacity is based on a given product mix, weight, components, multiple component size, etc. Effectively, going beyond 75% is very difficult. So one is rated capacity, one is theoretically kya kar sakte hain. On the mobile plants of Proflex, each mobile plant has to move from one location to another. We have 14 such mobile plants. Average utilization per plant cannot go beyond 100,000 square meters per plant per year. So we are adding, as Chirag Bhai explained, a few more plants. We are okay, I am not saying that I will not do higher business if I don't get margins. I am saying I am more efficient I want to utilize my plants in the fullest, and I still want to maintain a higher margin. So these are from my side. So Chirag bhai, want to add anything?
Yeah. So, Sanjeev, what you explained is correct. The industry norm for both our divisions is around 75, and we can push to 78. So, Sanand at 72,000 tons of current capacity. Last year we did 52,000 tons, and we should be reaching to the optimum capacity this year. And expansion, I can only, it takes about 9 months for us to expand the capacity. And Sanand is the only AISC and CWB certified plant. So if I want to increase my export, it has to be from Sanand plant only. Obviously, we can take for Cheyyar as well, and which we are planning to take in the coming years. But currently, because looking to the export market, I have to keep, I have added this capacity, which current capacity of 72,000 will reach to the optimum this year, and therefore this additional 20,000 will only help to get the growth for the next year.
So what about the additional money that will be lying idle, that will be, of course, that will be, you will be deploying over the money market instruments for next 2 years, that is amounting around close to 88 crores. So obviously our pre-money ROC is around 31%, and we will be earning hardly 7%. So obviously 23% of ROC will be sacrificed, and you are adding that close to 25% of your capital deployment will be idle because the rated capacity and actual capacity difference. So why that cannot be?
I'm sorry, sir. 1 second. I will be deploying most of it by middle of next year or maybe end of next year. Having said that, Rome cannot be built in a day. This is very normal that 1-1.5 साल तो हमको इतना बड़ा expansion करने में लगता है. Secondly, please understand, we are a capital goods manufacturer. We have to train people. हमारा पूरा HR, manpower, all my resources have to be balanced. So rest assured, we are very conscious about ROCEs. Having said that, जो reality है वो ये है कि मेरे को ये जो time लगने वाला है वो लगने वाला है. I mean, it's easy to say that आप सब कुछ एक साथ कर लो, but very difficult. You have to manage the resources, you have to balance, you have to make sure. Cheyyar plant was set up only last year. So this year my target is to reach 60-70% in Cheyyar, for which we have deployed people. There are people working there. There is new territory for us. So we are working very hard to get the customers. It takes time. So I think this is fairly reasonable, but you are right. थोड़ा बहुत ROCE का compromise होगा, but long term में we should be back on track.
So, I mean, net working capital turn, what is the maximum net working capital currently around 4.3? So, to what extent it can go up?
Sir, if you see my working capital days, we are easily doing more than 5 or 6 turns, easily. And we are practically today debt free. Even हमारा CC utilization 0 है. जो buyers credit 80-90 करोड़ का 100 करोड़ का मैं utilize करता हूँ वो 6 से 7% में है. And 6 to 7% money I don't want to replace with a 25% IRR expectation money. Correct? So I think it's a very balanced proportion. Our working capital is very well managed, and we will maintain good turns on the working capital also.
So you are seeing more. So you are seeing more opportunities abroad, or let's say we are actually very much jubilant on the Indian economy, but whereas you are actually external markets focusing. So I mean,
no. It is wrong interpretation. We have never said that we are not gung-ho or bullish on India. We are extremely bullish on India. But we got an opportunity, and we have got an access as the only PB player today to be present in US, where margins are very good and working capital cycle in US is only 45 days longer. I get payments upfront. So overall, when I get a better margin, therefore I will set up the second plant last year in Cheyyar. 3 साल बाद I will probably have a third plant as well as a strategy. If you see, I will be pan-India. I am not saying that I will do US at the cost of India. I am saying I am doing US plus India. And that is my unique strength.
So the tariff won't affect you if it stays at 50%?
आप देखो मिस्टर ट्रंप ने फरवरी में 25% सेक्टरल टैरिफ आयरन स्टील एंड एल्यूमिनियम पे लगा दिया करेक्ट सो हम बिकॉज वी आर टेक्निकली स्टील वी हैव बीन पेइंग दैट ड्यूटी इसके बाद जून में मई एंड जून में कब लगाया और 25 जून समवेयर इन जून अनदर 25 केम टुडे ऑल माय कस्टमर्स आर पेइंग 50% जब हुआ क्या है प्लीज अंडरस्टैंड जैसे ये टैरिफ आया लोकल सप्लायर्स जो थे उन्होंने अपने भाव फटाफट बढ़ा दिए सो माय आर्बिट्राज इवन आफ्टर 50% स्टिल रिमेन्स मैं समझता हूँ कि $400-500 का बिटवीन अवर प्राइस एंड देयर प्राइस आई स्टिल एंजॉय दैट आर्बिट्राज यू गेट माय पॉइंट आई डोंट पे कस्टमर पेज टैरिफ माइंड यू एंड आई हैव नॉट सिंगल ऑर्डर कैंसलेशन और रिनेगोशिएशन
No, in that case, there is a chance for the local, some of your prospective clients looking for other geographies. That is my point, concern.
Who? Sorry, sir. Can you repeat your question? My prospective clients. So,
yeah, whatever your prospective clients are there, if because of India getting hit by 50% tariff, and let's say some other.
The only geography I'll tell you. To my knowledge, Chirag, you want to add on this geography?
Yeah.
I don't think China imports are possible.
Yeah.
No, not China, but no Canada, Mexico, whatever. The adjacent North America.
No, sectoral tariff is applicable to all countries. It is not just us.
Entire world.
Last year, 2024, US imported 27 million tons of steel and steel products. Right? So these capacities, they cannot be built overnight. A 5 million ton plant, someone has to set up even in US will take at least 4 to 5 years. So
for other countries, the secondary tariff will not be applicable, no, sir. That is the major point.
No.
For other
sectoral to Mexico.
Sectoral is applicable to all countries. We are part of sectoral tariff, which is applicable to all countries. Not just India, it is across the world, all the countries are paying this sectoral tariff.
तो ऐसा नहीं होगा कि इंडिया भी इधर
Okay, sir, we'll see.
Mr. Surya, let us take some more questions offline if required.
Sure.
Yeah.
Sure, sir.
But that part is extremely clear. Sectoral tariff applies to the whole world. So I am at par with any other exporter to US.
Okay, thanks.
Thank you.
Our next question comes from the line of Aryan Bothra from CD Sales. Please go ahead. Aryan Bothra, your line has been unmuted. You may proceed with your question.
Hello, I'm audible?
Yes, you may proceed, sir.
Yeah, firstly, congratulations on the blockbuster set of numbers. I'm an individual investor in your company and I've taken some part of the company while the IPO. Everybody has been talking about the margins and everything, and I just wanted to confirm, you all said that you all still have a competitive advantage in US since their local manufacturers there have been quoting $3,500 to $3,600 per ton, and your quotes remain at $2,500 and $2,600 per ton, right?
Correct.
Around that, yes. We don't go into specifics, but you are right.
Yeah, somewhere about that. And what could be that number in India?
Sir, India mein average realization was 119 rupees per kilo, as it is evident.
Okay, thank you so much.
The PB side.
Yeah. And most of my questions were already.
Yeah.
Yeah.
Thank
the
you.
PB side.
Thank you, Mr. Bothra.
Thank you. Our next question comes from the line of Lakshmi Narayanan from Tunga Investments. Please go ahead.
Yeah, thank you. I just wanted to have a question related to your capacity utilization and the volume outlook in exports and domestic for the year. For example, we have close to 22,000 in Sanand and around 32,000 in Korea. So what's the kind of utilization? You mentioned around 75% in Sanand and 3% in Korea this year. Is that right?
Yes.
Yeah, that's right.
Correct.
So what is the production outlook you're looking for the full year?
Yeah, it should be matching more or less.
Around 70,000 tons, sir?
Yes, yes.
Yes.
Sure. Got it. And in terms of the export mix and domestic mix in terms of tonnage, what is the mix for this quarter, and what do you think?
No, we don't share that sector-wise, because of obvious competitive reasons.
Got it. And just one last question is, in terms of the business parameters or maybe qualitative metrics, what are the 3 or 4 metrics you actually look at it, not maybe short term, but even on a long-term basis for the company?
I'm not sure. Chirag, what do you mean by qualitative metrics in the sense? What factors we consider while taking an order?
No, constantly, do you look at which are the key things you look at? Do you look at receivables? Which is most important for you? Is it the tonnage or EBITDA or client level realization? What are the things you actually track much more closer than just the financial parameters?
Yes. So this is Aditya. So other than the financials, we normally look at how good the client is a paymaster. First of all, I need to get paid for what I have delivered. So repeat client is one of my priorities, first thing. Second thing comes the volume. How much volume I can generate, because volume in turn also little bit translates into increase in margin. So, and third parameter would be the margin. 3 things that we focus normally on while taking each order.
Got it. Thank you, sir.
Thank you.
Thank you. Our next question is from the line of Vandit Shah from Abacus Asset Management. Please go ahead.
Hi, sir. Thanks for the opportunity and congratulations on the set of numbers.
Thank you.
Just one bookkeeping question. When we see our numbers, the gross margin for first quarter FY26 has come out to be 33% on a consolidated level, whereas it was 36% in first quarter FY25, which is offset by a lower employee cost and lower other expenses. So, sir, have you seen any line item moving apart from the COGS, or like how do we see this?
Sir, the gross margin basically is the result of revenue as well as my COGS. So, whenever the export is higher and domestic is lower, margin tends to be higher. In first quarter, as we said, we have only booked 3 crores rupees of export and 15 crores are under goods in transit, which we could not convert it into revenue due to the India's stipulation. So this is the reason why my margin will be showing lower figure compared to the Q1 of the previous year.
But I think as a thumb rule, Mr. Vandit Shah, मेरे हिसाब से as a thumb rule, for our domestic business, PEB around 30 to 32% is a sustainable gross margin. Proflex में also around 32 to maybe 33, 34, 33%. And exports में definitely gross margin will be higher.
Yes.
At least 40% and up.
Okay, sir, got it. And so just one generic question. When we see such great realizations in exports and the margins, how much time would it take for our competitors in India to get into the export market and actually start getting the orders? We understand there are certifications which they have to get, but just on a generic view.
Yeah. So I'll put that question. See, we have been working very hard for the US market. Currently, I have a team of 5 people who is on the ground in the US, who is selling to our customers, making inroads with the general contractors, because there the end customer is our general contractor, which is an EPC contractor for in India. So it takes time, but once again, I would reiterate that North America per se is a very big market. It's an ocean, right? And our product, pre-engineered building, is a very labor-intensive product. It is not like a manufacturing of a repetitive manufacturing, because each and individual project is different. Each an individual part mark that we produce is different than. So and for the US market, we generally give as a solution because we also do the engineering, we also do the design, we also take up the detailing, which generally in US is separated by the general contractor. So anyone can enter, right? But it will take a lot of efforts. What we have put in as efforts and our resources financially, as well as the marketing efforts that we have done in the last 5 years. But having said that, there is a lot of opportunities. So many more people can be supplied, but then they have to have that focus for the market.
And just to add, Chirag, we also need to demonstrate. So we got this opportunity in 2017 when we constructed the first part of Swaminarayan Temple in New Jersey. Then we added 2, 3, 4 such buildings over next 2 years. That gave us visibility in that market because you just can't enter and say that I will supply. And then in 2020 we got this certification. Then we added number of people there. So it's a process. It's a process we have undergone over the last 4 or 5 years. And I think we should maintain that early mover advantage. The lead. We can't say that nobody else will enter. That's not possible. It is possible people will enter.
I will add something to that. See, we've had an American collaboration when we began in 2008, and that helped us establish certain standards and practices, which gave us a platform to be able to start doing business in the US, right? In the US market, the expectations for quality and delivery standards are much higher than what we are generally used to working in the Indian market. So, it took us a long time to establish these standards, and we've moved up the learning curve in the last 5 to 6 years that we've been working with the US clients, right? And working with these general contractors, that also gave us a good knowledge about how the US PEB industry works and what the client's expectations are. So while any other company can initiate working in the US, it is going to be a long process before which they can establish a certain standard and a platform before which they can start doing business in the US.
Sure. Thank you so much and all the best.
Thank you, Bandit. Thank you.
Thank you.
Thanks.
Thank you. Our next question is from the line of Chirag Kaskiwala from Neo Asset Management. Please go ahead.
Yeah, hi. So apart from your order book, what is your order pipeline currently, and what is your hit ratio whenever you bid for the new project?
So there's a healthy pipeline. One second.
Roughly, you don't need to give exact number.
So it's close, I would say it is close to 250 CR. 250, that is a cost, 80%. I think it would be close to 500 CR, the pipeline.
Very good. Both domestic exports.
I don't have the exact number, but it is close to 500 CR plus.
And exports will be about another...
Export is around 25 million. 20 million, sorry.
And what is the hit ratio when you bid for the project, normally?
The hit ratio would be around 12 to 15%, roughly.
US में that hit ratio does not apply because we are only very specific focused negotiations are going on. So there is no hit ratio in US, but on an average, as I said, about 100 crore of order book built up every month is the run rate with which we are doing.
Okay. And just to these are some of the orders which are the list of the numbers that I said is based on some of the orders which has a high probability. Otherwise, there's a long pending book of orders which may materialize, may not materialize, or lack of confidence that we have. But yes, the decent numbers that the number that I've said, which has a high probability.
And when you look at export market in US, Canada, and also which are the other geographies you're competing with, and if you compare your cost metrics along with their cost metrics, excluding the sectoral tariff, so how much competitive you are as compared to other geographies?
So currently we are competing in US. There are no. Sorry, Malaba, you want to take it?
Yeah. See, basically, US में क्या है कि the highest exporter to the US of pre-engineered buildings was Mexico, correct? Now with the sectoral tariff में all the exporters of steel and aluminum components into the US have been affected. So it's not only that India is standing apart or Mexico is standing apart. China से तो steel जाने का almost बंद ही हो गया था since the first term of Mr. Trump, right? As I said, highest exporter was Mexico and then was Canada. मगर अभी सभी पे 50% लग गया है, so everyone is on the same plane. I hope I answered your question.
If you exclude the sectoral tariff.
I think, Chirag, you are talking of other geographies. So where I think Africa is the third most probable geography, where in the past we have done a lot of dispatches in the past also to players like Dangote, etc. So Africa would be a very, very good potential market where we are seriously working on already.
What I'm trying to understand is, let's say if you exclude the sectoral tariffs and just compare your cost metrics, and then how competitive you are with, other competitors in, let's say, who are also trying to get orders in US and Canada and all. If you exclude the sectoral tariff.
So in PEV space, not that we have come across anybody from India who's supplying there, to best of our knowledge. So that is difficult for me to compare. But saying that, we are still quite competitive within the US market on its own.
Sir, honestly, we are cheaper. We are cheaper by at least 20%.
Correct.
This is with respect to Mexican players or with the other players?
Local US players.
Local US and now even Mexico and Canada.
Okay. Thank you.
Thank you.
Thank you. Our next question is from the line of Nirav from Systematics PMS.
Last question, please, moderator.
Certainly, sir. This is the last person in the queue. Nirav, you may proceed with your question.
Yes, am I audible?
You are audible, sir.
Yeah, congrats for a good set of numbers. Actually, one bookkeeping question. I missed the volumes for this quarter as well as for last year.
Volumes. 1 second.
Yeah. This quarter, we have done, say, 1,482 tons in PV and 3,21,000.
14,000.
And 3,21,050 square meter in Proflex system.
14,800, correct, Kev?
14,822 metric ton in Phoenix and 3,21,000 square meter in Proflex.
Yeah.
Roofing. That is supportless roofing.
And for last year, Q1?
Last Q1 tonnage was 6,579 in Phoenix, and in Proflex it was 2,60,271 square meter. Q1 of 25.
Thanks a lot.
Thank you, Nirav.
Thank you. I now hand the conference over to Mr. Chirag Patel, Joint Managing Director, for closing comments.
I would sincerely thank everyone who is part of this call and who have supported us for our IPO endeavor. And we are very positive on the growth prospect that we just discussed, and would like to, if anyone has any further questions, you can be in touch with us, and we'll be happy to share whatever questions there are. So once again, thank you everyone, and appreciate for your time.
Have a good evening. Thank you.
Yes. Have a good evening and a good day.
Yeah. Thank you.
Thank you. On behalf of M&B Engineering Limited, that concludes this conference. Thank you all for joining us. You may now disconnect your lines.